Hello guys. A lot of people, they send me private emails and some comments asking me for that kind of penny stock characteristics. It means how do you choose those kind of stocks? Okay, so for me, if it was like a penny stock, it means a stock under $5. I will try to see those kind of stocks that go up slowly. This is the trick. They go slowly. Now why? Because most of the time when they go slowly, it means people are buying, but they don't show their hands. Okay? It is not a pump and dump scheme. Now, if it is a pump and dump scheme, it's easy to see. You see a stock that it is moving so slow, like let's say a stock that it is $1, it goes 2 cents next day, 5 cents the other day, 10 cents the other day, it goes down 2 cents or 1 cent. It means this stock, when it's moving up, okay, slow, and then when there is a scheme, how do you see a spike going from, for example, 2% daily? It means the stock goes 1% or 2% daily, and one day you see that it goes 15% in one day up. Now this here, we have certain kind of pump and dump, and sometimes it goes up, sometimes it doesn't, so it is so risky. So those people who go and buy these volatile stocks, they were before, they were just going slowly. You can see in the chart, okay? They go very, very slow. If they are going up, you see that the trend begins to do. Okay, if you haven't seen my video before, please try to go and check the video called Characteristics of a Good Penny Stock. Okay, this video, it is in my channel. Just try and check it, and you will see the chart, how it looks like. Okay, these kind of stocks are going so slow. That's why when you search, you don't find them. Okay, this is the trick. I'm telling you a trick about searching. In searching, you can't find that kind of stocks because of what you put into search. Okay, if you go and you put the stocks that go so high, you will find a lot of like this. Mostly you find them, these stocks are penny stocks. The stock that go down too much, you find most of the time you find penny stocks. But stocks that go slow, how can you know them? In the stock market here in the USA, you have thousands of stocks, and this kind of stock that's going up slowly, you will never know where they are. So what you should do, you should search. Now this search takes time, and most of the people that I know, especially beginners, they don't want to work. They want a ready-made thing. You just give them a stock and they buy it and they make profit, that's it. Okay? But in order to become a professional trader, to rely on yourself, what you should do, you should follow this thing. Now, this kind of stock that I'm speaking about are slow stocks. They are penny stocks. It means when they go, you will see that, for example, they go from $1 to $2 in 1 month or two. Okay? These kinds, how can you find them? You will never find them if you don't have a way, a strategy to follow them. Okay, you should find an exit. You should find an entry level. It means where do you buy these stocks? When you see the chart. Okay? I have given you an example with the characteristics of a good penny stocks. Okay? And here I will just add, because a lot of people, a lot of subscribers and some viewers, they send me private messages. They ask me, can you specify more about this kind of stocks? Now, as I told you, most of these stocks, they go slowly. Now, you will see that they hit the resistance for one month or 2 months or 3 months, and they go slowly. You will see that there is no big spikes, either down or up. You will never see that. Okay? Even if you see, it could be like little bit. It's not a big spike. Because these big spikes, how do we have them? How do we have this pump and dump scheme? Okay? This because of the promoters and the scammers online. Okay? You will find here online, you will find hundreds of these promoters and scammers. They ask you, we know which stock will go up, like a penny stock, and you can have 500%, 1000%. They say what they say, and you just go to their mailing list, and they will send you one stock. Most of the time, they send you one. Okay, why they send you one? They don't send you many. Can you answer this question? Okay, why? If you put in a mailing list and you always have one stock, they say this is the stock that we think it can go. They know that there is a plan for this stock, because there are these guys, they are professional traders, and they are doing plans. And if things goes to their plan, they will make too much people from these beginners, because the beginner, he doesn't know, he doesn't understand how things go. Okay, so you find a stock that is going down for 1 year or 2 years. Sometimes stocks that are new, it's just new stocks that enter to the exchanges or to over the counter. They are just new. No one knows about these companies. And they give you a very long email having fundamentals, earnings, and what they think, and whatever is information they give you. Okay, and what will happen is that when all the people, they ask them to buy on the same day. Okay, this is the trick. Now, all the people, they know how many people are there. For example, if they have 500 people, let's say they have 1,000 people. If 1,000, okay, 1,000 buys each one of them $1,000 of shares. Let's say the stock is $1. You buy 1,000 shares with $1,000. Okay? Now, 1,000 by 1,000, you will have $100,000. Now, this stock was trading very slow, and then one day you will see the spike. That's why I'm trying to explain the spike. The spike up or down, it means the breakout. It means the stock was $1, and then at the end of the day, the next day, it is 150. So 50%, 80%, or doubled, depending on the money that those guys buy. Now what they do, okay, either they let this stock and they ask more people to buy. It means they want to have the jackpot. When the stock hits $2, $2.50, $3, these guys, they have too much money. It means 100,000, 200,000 is not a big deal for a professional trader. Okay, so what they do, they sell short all the beginners shares they buy, because they buy long, and because as you might know, some of the guys who bought the first day, for example, at the beginning, and maybe at the end they make money. Some they sell and they make some money, which is true. They have maybe $100, $200 from this $1,000. They can, but almost all the people, since they wait many days, the other guys will short the stock because it's only one stock and it is hidden. No one knows about it. Just those who buys, the beginners buys, and those who are waiting that to have the big stock, means to fatten, and then they go and they short it. When they short it, you know, it goes to $2, $2.50 or $3, and they will make it go to $1. Okay? And all the beginners, they lose their money. This is what we call a pump and dump scheme. Now, for me, when I'm looking at this kind of stocks, I would never buy a stock that goes like breakout and like spike, because I know that there is someone, a promoter or a scammer or a pump and dump guy, as professional trader, is doing the business. Okay, so for me, I don't play this game. I don't go to this kind of things, and I don't want to risk my money, because for me, I'm doing just swing trading. I am not day trading, so I'm not going to follow these guys. Okay, so for me, I'm trying to find stocks that it's not advertised. This is the trick. No one advertised. Most of these stocks, no one speaks about them, because in the when you see analysts, they are not interested to speak about this kind of stock. They are very small. And I'm not trying to look if the company is good or bad now. If I see someone a big hand is buying for maybe 1 month, 2 months, 3 months, 6 months, I follow this big hand. And I put always a stop loss that I don't lose money, that much money. And each day it goes up, I change my stop loss. Each day it means I will try to lock my profit when they short it. Okay, so I don't let them short the stock, and I have no stop loss. Okay, this is what I do if I want to play this penny stocks. Now, someone asks me, "Oh, you always ask the beginners not to do penny stocks. So why are you doing penny stocks?" Yeah, I'm doing penny stocks. Some few times in the year I do few. Now, if I find them, okay. So I'm not interested in penny stocks. But sometimes when I'm searching for stocks for me to buy, according to my strategy, I find this kind of stocks. I just find them and I like them. So I put just little money in them, and I don't put that much money. So if I get, it's like when you get, before you get the meal, you get a snack. Okay, if you get 800 or 1,000 in a few days about this, so for me it's not a big deal, but it is something. Although it is not big thing, but for me it is something, and I don't want to put too much money. Because if you put too much money, the stock will change the direction and you will begin to see spikes. When you see spikes, all the people who are following this penny stocks, they discover your stock. Okay? So the main thing in trading is that you don't show your hand. You don't show where you are. Okay, until you get the profit. Because if you show a stock to someone, okay, and you buy it, and next day it goes to spike up or down, it's over. It means you spoil your game. So that's why the people, even the mutual fund manager, when they buy stock, they don't speak about them. But after 1 year, when they get too much money and too much profit, they speak about it. They say, "Oh, last year we bought that kind of stock, but we sell it." When they lock their money. Now, some other people, they come to buy it, but it's over. It's for 1 year or 2 years they bought it, and they have too much money. A stock was $10, now it's $100. How can you go and you buy it 100? And if the mutual fund manager is selling off, no one will tell you, but the price tell you everything. Okay, so you don't need any outsider information. The price is everything. That's why for me, I'm looking always for a price, resistance and support, and my rules that I apply for the stock. That's it. I don't see the news. I don't see what the people say, chat rooms, websites, TV shows. I don't watch the news, what's going on in the market. I don't care, because anything that happens in the market is in the price. Okay? Everything is in the price. So why should I? Because the news, when they send you the news are done. It is in the price right now. So you can't take advantage of this news. Maybe rumors, yes. Before the news, before they say. For example, someone said that this company, I think that it will have like a good earnings this time. So if I say this before the earnings, before 2 months or 1 month, you will see that the stock, if this guy is very famous or something, some people begin to buy. Okay? So if you buy at the first and you see the stock's going up, you will make the money. But if it is at the end, when the news, they get the stock get hit with the news, it means sometimes good news and the stock goes up too much, like a breakout or like a gap up or gap down, it's over. It means you can't make the money at that time. Okay, the money you should make it before, not after. Okay, so this is the most important thing in penny stocks. When you are searching, you should find stocks that are going slow, but they are going up, and you will see that. You take the chart, okay, and you will see that this stock is going up and up and up each day. If we have one day it goes a little down, it's not that big deal. It's not, they don't go too much down because it's not shorted. Okay, just some people, they sell some shares they get because some people, they bought hundreds of thousands of dollars of shares. It's not just 100 shares, 1,000 shares. But for these kind of stocks, most of the people, they buy, and depending on the volume, you should check the volume. If it is millions of dollars or millions of shares traded, or it's just few, like 20,000, 60,000. Okay? And some people, they try to buy and wait and follow the stock until they get a good profit. Sometimes they get enough and they quit and they exit this trade. Sometimes they follow the stock for many weeks if the stock is going up. But if it was shorted one day, and if you don't put stop loss, you will lose all your profit. So that's why stop loss is always very important, and especially in this kind of stocks, because they are volatile. They seem going slowly, but if some people discover them, they sell short too much or they buy too much, and you will see there is a big volatile, big spikes, and I hate those spikes. Because when we have a big candlestick like this, a green or red or something, it means that there are a lot of professional traders that come to this stock, and which is not good. Okay, so if it is hidden, this is the good thing. So if you are looking for this kind of stocks, you should search a lot. Now, in my chart that I'm using, it has this capability of looking at penny stocks when you check only the prices from $5 and under. So you go to any industry or sector, then you click on each industry, and then you go and you search for this kind of stocks. Okay, when I finish this video, I will try just to show you how to search for this kind of stocks. Okay, so if you have more question about this, just ask. Another thing, it's better that you should see a high volume of these stocks, because how do you know that this stocks is good? you should see the bid and the ask. It shouldn't be more than 1 cent. Sometimes it's 2 or 3, it's accepted. But if it is 10 cents from the bid and the ask, you will lose a lot of money from the bid and ask thing. So try to check only the high volume stocks that are millions of shares traded a day. You can check that. Just check the thing. I will show you in when I do the other video. Okay. So if you have any questions, just ask. Thank you very much.